I'm Charlotte McLeod with the Investing News Network, and here today with me is Frank Holmes, CEO and Chief Investment Officer at U.S. Global Investors. Thank you so much for joining me. Great to see you as always.
Well, Happy New Year.
Yes, Happy New Year to you as well. You were my first interview in 2022, and now we're beginning 2023 the same way, which is great. Before we do start looking forward at what's going to happen in the next 12 months, I want to take a quick look back at gold in 2022. If you could tell me the factors that you think most influenced the metal during the past 12 months.
Well, what we did see was this huge surge, unprecedented surge in government yields in the US, and that led to the strongest dollar. If you looked at where the dollar rose, previously how much gold declined, because there's a strong inverse relationship, gold should have been back to $1,000. Actually, gold held up exceptionally well on how strong the US dollar was. And even with this surge we've experienced in 2-year, 5-year, and 10-year government yields, we still have negative real interest rates. And I think that that's what's really important for investors to grasp, that the largest private equity, BlackRock, private equity firm in real estate, had to start gating redemptions. You know, last year the narrative was only crypto exchanges were gating people. And all of a sudden now we have the premier private equity shop in real estate cannot meet the redemptions, and this is the panic of rising interest rates. So I think that that's what's really important, that gold was actually quite resilient. And this century, 22 years into this century, gold has been still positive 80% of the time. So this sort of negative perception is really shocking. Gold far outperformed most other asset classes. And I thought that was quite interesting. So having the concept of the 10% golden rule, having 10% weighted in gold, is actually quite prudent to an overall portfolio. And that's something that Ray Dalio goes from 10 to 25% in gold in his parity trading. So I think that gold did exceptionally well. What's also interesting is that the futures market suppressed gold, and we saw redemptions coming out of the GLD, but then we come out with these charges with another person proven of spoofing the gold market and being charged and found guilty of the gold market. And they usually use the futures market for this because futures market are leveraged 10 to 20 times. So you get a bigger bang for your buck on, and this big banks like JP Morgan would use the futures market. So I think something was artificial and there was suppression going on with the GLD and the futures market. However, it didn't stop the demand and the thirst and the hunger for gold. We saw what shocked everyone in the month of December was central banks of this huge growth in demand. And so even with rising dollar, they went to gold. I think that that's quite interesting. Gold coins at the sites like Kitco were at a record pace. Silver coins, same thing. It's hard to get physical coins of any large amounts immediately delivered to you. So there's a shortage of it. So I think that that's very positive and constructive. And then for the gold stocks, the boards of directors and the CEOs of these gold producers are much more disciplined than previous cycles. And I share this with you, Charlotte, because in the universe of the 100 gold producers I track, 75% of them had a free cash flow yield. Now, if you go back to 2013, a lot of them, something like 15% had a free cash flow yield. And so the gold stocks greatly underperformed. And what we did see in our portfolio, like GoAU, our ETF that's quant-based, from the lows of September, it jumped 38%, while the price of gold went up 9%. So why did that happen? Well, the basket of those stocks have a high free cash flow yield. And so you saw smart investors going into gold stocks. Well, gold started to rally. So I remain extremely bullish on gold as an asset class. They can't raise rates much more this quarter without having a very tragic global recession. And I think that there's still going to be negative real interest rates. So that means assets like gold are going to become even more important in a diversified portfolio. And silver is even more special because 20% of silver is for solar panels. So it has a big industrial demand in addition to the beauty of owning silver coins.
Okay, so I think that gives us a good idea of your thoughts on 2022 for gold. We have a lot of different paths that we need to follow down. The first thing I want to ask is if you could distill for us looking forward to 2023, what are the main factors you see influencing gold in this coming year?
Well, there has been a big push last year. And interesting for me was China has been on this journey for 5 years trying to get the Saudis to take their paper fiat for oil. And the Saudis have declined and declined. And the big reason for that, not enough gold, is because they're just going to buy Chinese paper. And what can they do with that? So what's happening today is that Saudi Arabia is going to take the yuan. Now the yuan is backed by much more gold. And we saw that in December, the filings after 3 years, a huge increase. So they're doing everything to back their currency with gold. Now Saudis are going to turn around and do this trade. And then the Chinese are going to say, we'll take back our currency and you'll buy our knockoff tractors and caterpillars, the Chinese version. And then we can turn around and build you railways and refineries. So they're trying to do this two-way trade, which then is going to have an impact on the EU, especially Germany and the US. So I think there's a movement going on. And the other big movement is the overreaching thought process of the US government, in particular the bureaucrats, and what they like to call the deep state or the Beltway Party, as I would prefer to call them, as Bernanke called them, that this overreaching into other jurisdictions is all of a sudden pushed back, that the BRIC countries are looking to form their own currency and that trade for currencies for trade settlement. Right now, all oil trade goes through New York and it's all done in US dollars. It's all done through the SWIFT network. And that is being pushed to become a BRIC network. And therefore Brazil looks to join, and Russia and China. So therefore energy transactions and oil trade and commodities that Brazil exports, and Saudis and Qatar, they export. They're trying to create something, and that's very strong for gold, and it's weak for the dollar, and it makes geopolitics really quite fascinating to see how everything's going to get repositioned. And it's clearly showing us the central banks have been sniffing this problem all year and for the past several years, and other central banks bought more gold last year. So I think this idea of fiat, dollars, and other currencies is going to evolve, and they all need to have trust is based on gold.
Right. Okay. So there's a couple of ways that we can follow this. I think let's talk about central banks and their gold purchases. So as you mentioned, that was a surprise last year when the buying came in much higher than people expected, much higher than it had been in the recent past. So you see that continuing. Do you have a sense of which countries will emerge in 2023 as the top buyers of gold?
Well, I think there's no doubt India will still be there. China will be there. I think you're going to see more Eastern European countries, which have been steadily increasing their exposure to gold. And with that, will it change for countries like Canada all of a sudden to wake up the politicians that if you're going to be anti-oil policies, that means you're going to have a weak dollar, Canadian dollar. That means you're going to have more inflation. Then to build confidence around the world in your country's policies, then you better have a stronger gold holding. So things like that, I think we're going to see a transition of other nations increasing their gold exposure. I think the UK will increase the interest in gold as a currency.
Okay. And I think one thing that can be confusing for people who watch the gold market is they see these large purchases, they see some of the geopolitical factors that we've been talking about, and they wonder, why isn't the price going higher? So maybe you can talk a little bit about that. I know you mentioned there's manipulation in the market. What do you think is holding gold back primarily?
Well, I think it's the surging interest rates in the US relative to other countries in the world has led to the strongest currency being the dollar. And the US government has the most gold in the world. If you look at Fort Knox, the only other individuals are women in India has we're 6 times more gold than what you see they have a cultural affinity than what's at Fort Knox. But when we look at these other countries, the US has a strong position. I also believe that there's been games played in suppression with the futures market and the GLD, but it's always short-term noise. It doesn't stop the underbelly significance of having gold as a diversified portfolio. And I think that's showing up with central banks. And I think we're going to have more investors that will wake up to that, especially strong hedge funds like Ray Dalio's complex.
Right. And so as investors wake up to this, you mentioned it's getting harder to buy those larger amounts of gold. What do you think that they're going to be after? And are they going to be facing high premiums, shortages? What do you see coming there for, the average person who wants to start buying gold?
I think you're just going to see you buy the dip. Like you buy and hold on for dear life. And what's really interesting to me to share with your listeners is that gold's DNA of volatility, which I write about all the time, last year declined relative to the S&P. They were always the same. Over 1 day, 10 days, 20 days, 1% was the daily volatility. And over 10 days, you saw them being the same. And all of a sudden, gold is actually less volatile than the S&P 500. So that makes it much more significant in pension funds diversifying with gold. And I think we're going to see more pension funds come into the space of owning gold. And that will be a very significant, if you take a look at the total dollar amounts that are out there.
Right. Yes, I've heard before, it doesn't take much to move the gold market. If something like that were to come in, it could be very significant. So you started to mention interest rates and inflation in the US. So I want to check in with you there as well. It's been hard to talk about what's going on with gold without talking about those things, as well as what the US is doing to curb inflation. So what do you see as the path forward for the Federal Reserve in 2023? What are you expecting there?
I expect rates for the 10-year have peaked, or they will peak this next quarter. The spread between what they call it's inverted now, that is the short Federal Reserve numbers are higher than the 10-year government bond, and most currencies trade off a 2-year bond. So that 2-year government bond is higher than the 10-year. So we can have actually the 10-year go flat or down, whereas the short term keeps rising. And the more inverted that is, the greater the probability of a recession. And I would share with you, we're in a recession now. And now we have this flat tax minimum, 15% coming out with the G7 countries. Money leaving corporations going into government has always been a slower economy. Purchasing manufacturers index for the world is negative. China is now trying to ignite their economy. The positive part is that China is starting to open up and deal with COVID without these severe lockdowns due to the protests. So that could help commodity demand, and that could help luxury goods and also the jets global industry. But it's still, we have to have a drop in short-term rates. You need a big bankruptcy to do that. You need a crisis, like the last time was Lehman Brothers. You then had COVID hit and the lockdowns. So you need some type of a global crisis to see the short rates fall below the 10-year, and then we will see the markets turn. And the gold markets will quickly, I think, gold will be at $4,000. I strongly don't believe that forecast in this next cycle is going away. But what's really important, Charlotte, are the junior gold stocks and the mid-cap gold stocks. They have to be gobbled up because the senior gold producers have not been doing crazy acquisitions. They've been focused on generating very strong free cash flow. And to replace those reserves, they're going to have to acquire other assets. And they can do it probably with banking. They can do it with cash because they have a high free cash flow yield. And if they do it with stock, investors will quickly penalize them if it impacts their free cash flow yield. So there's going to be much more discipline. And I think that some of these mid cap and small cap stocks, which have great reserves per share, are going to get bought up. So I think we're going to get in a very wonderful dynamic gold stock market in the next year. And what happens in gold stocks is that when rates start to fall in the US and the stock market starts to rise and gold is rising, that's when you get the phenomenal 10 baggers in gold stocks.
Okay, yeah, and that was something that I wanted to touch on with you, because we do see comments from our audience. You know, we've talked about how gold in 2022, it held up well, it was resilient. The gold stocks, people who put money into companies, maybe they didn't see that same resilience in their portfolios. So this, though, for you, you would see this as the year when they start to move up with gold. Would that be the case?
Correct. You've always had the best gold stock moves when both the stock market is buoyant and gold is going up. That's always led to the most significant exponential moves. And what you've seen with the gold stocks, if gold is falling and the stock market is falling, gold stocks take it on the chin even more. So historically, the volatility has been 1% for gold and 3% for gold stocks. And what's different this cycle is that 75% of the gold producers have a free cash flow yield. And the gold royalty companies are all of a sudden being populated in financial portfolios. They're not buying gold stocks yet, but they will buy a gold royalty company. So we do see that sort of growing. And that's always the big move in gold stocks, when the generalists start buying gold stocks.
Right. And so what would the strategy be for investors who want to start getting into gold stocks? Would they go for, as you said, the royalty companies? Would they look for takeover targets? Would they look at the big ones that are generating free cash flow? What are your thoughts?
Well, yeah, I think the free cash flow yield is very important. And I think that when you start going down the food chain, as you want to buy who has the most reserves per share, because that's the company that gets bought out by a major. Because it's got to be accretive when they go and dilute or they buy this other asset. They've got to turn around and transfer those reserves to their balance sheet. And if it's not accretive, then their gold stocks will go into the penalty box for 9 to 18 months. And we saw that in 2013 and 14. All these acquisitions are being made, and the final net was it was dilutive on a cash flow per share basis, on an EBITDA per share basis, and on a reserves per share. So people are much more focused on how these transactions would be accretive.
Okay, and I think we should make sure to talk a little bit more about silver as well, which you started to mention. So your thoughts on silver in 2023, and if you want to go into the silver stocks as well and what you see coming there, I think that would be helpful.
Well, hi-ho silver. And yes, I'm very bullish on silver because silver has a much bigger demand from industrial production for making solar panels. And the government in the US is focused on all this climate change spending. Now, I've been critical of climate. I'm pro anti-pollution policies and for air and water. But a lot of these climate change policies are just emotional drama for tax and regulation. And I think that investors have to recognize that. And how all of a sudden, I was reading to my seven-year-old daughter one of her books, and we were reading together, and guess what? Greenland, climate change. So the idea of polluting a kid's mind, a fear of this thing called climate change is at a very young age. It's like an indoctrination, indoctrinating. And so I sit back and say, that I'm seeing, like today, I read that Denmark wants to move refugees from Syria back to Syria because of climate change. So climate change has been a catch-all, abused thought, argument. And so what we do see is that the US government under this climate change is going to push renewables. Well, if you're going to push renewables, it's very strong for copper and silver. because you need copper for all the infrastructure rebuilding, for every car being, 1 in 3 cars being a Tesla. Guess what? You need to rebuild all of your electrical infrastructure. So I remain very bullish on silver because the government's policies are going to be in that direction. I laugh about another one is it may sound like I'm taking you off on a bunny trail, but when President Obama came to power, the operative word was Obamacare and how bad it was and how bad it was. Guess what? Healthcare stocks went up 8-fold. So all the negative narrative on healthcare was actually seeing all this money going into healthcare. Actually, you saw these stocks just ripped up through the roof, and mergers and acquisitions, etc. So you have to put on a contrarian hat and say, if the government's going to start putting all this money into climate change fears, etc., well, exactly where is it going to go? What industries are going to benefit from it? And you're going to have lithium. There's no doubt. That's why lithium can smell that. And lithium stocks had a phenomenal year last year and making lithium batteries. But I think the real sleepers are silver and gold, and back that with copper. And guess what? On the periodic table, copper, silver, and gold are all the same column.
Okay. And so if you had to choose a commodity for 2023 that you're most bullish on, would it be one of those? What are you thinking?
I think silver. I'm bullish on gold, and silver always has a beta 50% greater. So that means if gold goes up 10%, silver is going up 15. Gold falls 10%, silver is going to fall 15%. And then the gold stocks and silver stocks even have a greater beta. So gold goes up 20% over the next 18 months. That means silver is going up 30%. And that means that silver and gold stocks can go up 300, 500%. So I remain, if you have a thesis and you believe in silver and gold, then those quality silver and gold stocks will have give you huge portfolio moves on the upside.
Okay, so I can see that looking forward to 2023, it sounds like you are feeling pretty good. As we are wrapping up, are there any final thoughts or words of advice that you would leave investors with for looking at the year ahead?
Well, I think this whole thing on what they call centralized and decentralized, it is a macro phenomena like geopolitics of China setting up a currency outside of the SWIFT system with other countries to push back against the US dollar. All these dynamics, there's another dynamic of centralized versus decentralized. And we're seeing social policies in the US go by the Supreme Court from federal to state power. We're seeing Brexit leave the EU. Then we see everyone's upset with centralization because Russia's trying to take over the Ukraine and bring back old Russia. So there's a real push about going decentralized. Well, what are great decentralized assets? Gold and silver are, and so are Bitcoin. And that's the interesting part. Now, Bitcoin's unraveled this past year, in particular around what they call the cryptocurrencies, and those currencies that are really not a digital asset. They are basically Excel sheet on the blockchain, or building Excel so you can create these new tokens and currency. It's really not a digital asset. And scrupulous people come behind it, like Sam Bankman, who fried the whole system and made it so political. I think that the big mean reversion I think I stay very bullish. Today is Bitcoin's birthday, 14 years old, no CEO, and here it is, a dynamic asset around the world. I think you could probably see mean reversion on the upside over the next 12 months for Bitcoin. And I think any rebound when gold starts to move, it will have a bigger move. But I also believe that all these other tokens are probably going to get characterized as securities and get regulated. So we're going to get a bifurcation between the Bitcoin asset class. The other interesting part has been art. We talked about this earlier. The collection of art. Our art has been a phenomenal decentralized asset, just like in the past 22 years, gold has been. And so has silver. I mean, I remember buying thousands of ounces of silver when silver was under $5. And that's 22 years ago. And so it's had a phenomenal still run as an asset. So I think you're going to see that people are going to start waking up to this government money printing, this battle between a US dollar versus other countries' currency, energy. And so gold is going to play a significant role as a decentralized asset, and same with silver, and so will Bitcoin, and so will good art.
Okay, perfect. I think that's a great place to wrap up. I love the decentralized, centralized parallel. I think that's really useful for people heading into the new year. Thank you so much, as always, for sitting down to talk and let us know what you see coming.
Thank you for the opportunity. And remember, Charlotte, that you have to stay positive. You have to, it's so important to be a realist and not be reckless, but not make decisions out of fear. And I see a lot of people make decisions out of fear and they end up being actually reckless. So optimist research came out of MIT, and this showed that people actually adapt to new investment opportunities. They're healthier if they have an optimistic perspective, waking up every morning with positive intentions and positive expectations.
Okay, I love that note. We'll end there. Thank you so much. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Frank Holmes with US Global Investors.